Hey everyone, thanks for joining us for this installment of Coffee and Flood. Before this presentation begins, I do want to add a slight warning. We did have to edit the presentation of this edition as there was a little bit of misinformation that we didn't want presented around. So we did clarify that after the recording, and we've edited this video to remove that information so all the right information is being shared.
I'll let you
Yeah.
start us off, John.
Perfect. So we have started recording. So all of these are going to be going on to our Zoom YouTube panel portion that we have. We're doing sections on there. So there's going to be like a Zoom coffee and flood section where you can go view any and all of these because we still have, I think, three more additional ones that are going to be happening, but we have two already on there. So very good information for anyone who needs it. And today's topic, I think, is a very good one that Diana is going to be going over because it is all those problem like pain points when it comes to flood, whether it's NFIP or private. So today's session is called Glitches, Issues, and Complications. And this is our flood Q&A. And that's the main thing that we do want to stress. Even though we have some pre-planned topics here, we welcome any and all questions, comments, whatever it might be, because we want to engage in that discussion with you. And I will let Diana go ahead and introduce herself here, but I'm sure you guys already all know her anyway.
Yes, good morning, Diana Ducote. I am the Senior Flood Underwriting Specialist here. I am also a commercial lines underwriter. I am also your web and phone quote underwriter if you've used any of those at our company via the Maple system. So I wear a lot of hats. I definitely like to specialize, and flood has been my baby for at least 8 years now. Not to date myself, been doing this a long time, and I still learn something new every single day. So that's why when the opportunity came up to kind of do these 30-minute sit-ins, like I can only learn more if you guys ask me questions. Like sure, topics come up or appear across my desk every single day, but the more questions that I get from you guys, that really helps feed me to say, let me find an answer to that if I don't. So good morning, and thanks for sitting in at 9:30 on a Monday. I appreciate it.
Thank you, Diana. And yes, thank you, everybody, for joining us on your Monday. We know how rough those can sometimes be. My name is Dawn Halkyard. I am the marketing representative with New England Access Exchange, and I do also present on some NFIP coverage classes throughout the state of Maine. So I'll be acting as your moderator today. Hopefully, I will be able to assist Diana with any NFIP specific questions or feedback, but I will never declare myself as a flood expert because there is so much to that. And then here we go with some of our fun topics when it comes to those glitches.
I typically try to start all of these like, what am I doing here? So, why am I talking about flood? Are you talking about flood? What are those glitches, issues, and complications that you run into when you're doing flood? Again, whether it's NFIP or private, doesn't matter to me because flood is the same bucket where all of these markets kind of play a role and we need all of them. We need more markets, not less markets. So open to talking and discussing both. And it's very nice for me as someone who mostly only sells private to have Dawn on my team to help make sure that I'm up to snuff. I like to believe that again, I don't claim to be an expert either in NFIP because is there such a thing? I'm not sure. But I am very familiar and I try to keep abreast of that because I can't help you on the other side if I don't know what's going on that side. So after that, kind of overview topic of those glitches, issues, and complications, like let's see if we can really get into them. So some of the ones that we're going to talk about today are the mapping and community participation, missed payments or missing limits, elevations in pricing, and then lender compliance. And then, of course, as always, stop me, interrupt me 100%. Turn your mic on, put it in the chat, and Dawn will interrupt me. Like, let's talk about it in the topic that brought up the question to you, because oftentimes that is how it's the most relevant. And then obviously I always leave an open floor for any flood questions you do have in case I didn't touch on them. Again, it doesn't have to be about these topics. I am ready to pounce on any kind of questions you got. So thank you. Here we go. So why am I talking about flood? These are my top 3 reasons why I talk about flood and why I wanted to do these flood sessions and have specific, unique topics, not just the same, these are the limits I have and this is what I can offer you. Because there's so much more to flood. And that is why some people kind of bow away. Ultimately, I want to reduce any hurdles that you guys are facing in the marketplace. If there's something I can do to help you figure out why NFIP doesn't always work for you, I want to help you do that, even though I don't write NFIP. If there's a problem with the private market, I also want to talk to you about that because that is my forte. And my goal here at this company has always been I need to be able to say yes more. And no, I hate saying no. Sometimes you have to. Some risks just aren't great for the programs that we have, but I want to be able to say more yes. So I want to reduce any hurdles I can for you guys. Also, the second reason is to educate. I really need to expand all agent knowledge and understanding so that number one, it's easier for you to do flood, but number two, that it's easier for you to communicate with your insurance to get flood back in front of things, kind of where it needs to be. I know it's been that back in the 70s kind of thought process. If it hasn't touched me, it won't, which is my third reason actually. Flood is a cat coverage. It has devastating costs. The markets have changed so much since 1970. We all need a refresher, even from last year. I often need a refresher from just a month ago because of the way things are moving. We're all seeing on the news every day, and if you're not, bless you. I get notifications all the time. Like the world is flooding every single day. A new flood is kind of happening somewhere, and eventually it's going to call home or come home to everyone, right? So we need to be upfront to everyone that we're selling insurance to that this is a coverage that you need, and it's not part of the other packages. So we got to make sure that we can have that chat. Slide, please. So then the question back is, are you talking about flood? So as I mentioned, the increase in flooding events over the last, just say 10 years is increasingly scary. So from 2010 to 2019, there were about 130 major flood disasters that were declared. That's about 13 a year. However, there have been only 23 recorded in the 10 years before that. So 23 to 130, that's a significant jump. But then let's just even focus more closely ahead. So since 20 or 2000, there's been at least one flood event in the US on average 300 days out of the year, 365 days in a year. That's 300 days. So it's happening. It's happening all the time across all 50 states and the District of Columbia. Everyone was actually impacted in 2021, showing that it doesn't matter where you are. You're not safe anywhere specifically. If it can kind of rain where you are, you're going to see some flooding events. So in the last 25 years, the US has had urban flooding pretty much every 2 to 3 days. Millions and millions of people are exposed. However, slide. There's a lot of people in danger, but only a very small percentage of them actually have flood insurance. So why is that? Right? They're still in that belief that only the requirement mindset. That's that old way of thinking. So if the lender didn't require me, I'm not going to get it. It doesn't mean you're immune. It doesn't mean you don't have an exposure. It just means the lender's not requiring you to cover their butt. That doesn't mean you don't need to cover your butt, right? So similarly, most people don't treat it as a priority. They don't think about it like my auto or my homeowners, but without it, there's that kind of gap, right? And if flooding hasn't happened to them specifically, most often they feel pretty immune. But we really have to change that. And it's kind of our duty as insurance professionals to say, hey, just because those things, it doesn't mean you don't have a risk. And protecting ourselves, right? There have been so many E&O claims just in the last 5 years because the real flood talk, most insureds felt it didn't happen. And as you can guess, it's those who were impacted by flood and didn't have a policy in place, but had insurance for other things that didn't cover it. So while we may have done our full due diligence, we may have even talked some flood with them, they felt in most of these cases that it wasn't really explained to them well to say that they should have considered the coverage differently. And then many of those uninsured and underinsureds, they often do feel misled or misinformed about flood. And as you know, it's typically after an event has happened when there's not much we can do, right? We can then get them coverage going forward, but we can't fix that one specific event. So we should all be talking about flood. Slide, please. And together, how can we do this? We need to be talking the risk versus a requirement, because if it rains at your house, it can flood at your house. And if you, the agent, don't take flood seriously, why should they? Right? We need to be talking facts about the risk. Do you have an exposure? If the location has flooded, Would they lose property or need to repair damage? So how do we guesstimate that on a cat coverage? Do they live near water? Have there been events in their town? Are there things that are going on that, like maybe they're changing how their river changes, or maybe flood mitigations in town? When those things have changes or upgrades or updates, it actually puts more people at risk around that maybe weren't before. So we need to know this so that we're giving them the real facts about their location. And then the big one here, talk openly about flood risk. It's a part of the package. It's not that secret hidden one that you only bring up if a lender does. Like, it's not a one time ask, it's an annual ask. So you asked last year, they didn't want it. All right. Every time it rains, a landscape change. So you need to ask again next year. It's not a one and done. So be open about flood. And if you need help and support to do that, again, I'm here. There are plenty of resources out there, but flood is an everyday talk. It's not a, oh, I'm good. And 20 years later, they didn't get any. And 20 years later, their house is swallowed by a flood. We don't want to see ourselves in that position. That doesn't help the marketplace. It doesn't help us as citizens. We all pay taxes kind of into these programs that support people that don't have flood insurance. So we need to be open and discussing it all the time. Slide, please. All right, now the meat. And this is the fun stuff, right? It's not fun because it's horrible. I think it's fun because these are problems, some of them we're going to be able to fix. So there is no coverage in insurance that doesn't have complications or certain problems, and flood isn't any different. It's just different in what it is, right? So there are a lot of system issues. We know that on the flood side. NFIP has some, how do you put it? Like, things we can't control. Like, there's just things that are out of our control, right? So from those system issues to elevation issues to construction weirdness, from there's many different specifics that kind of impact the ability to quote flood, whether it's NFIP or private. There's so many little nuances that make it an easy way or not so easy. So let's talk about some of these problems and kind of debunk a few of them. And maybe we can reduce some of the burdens that come with a few others. And then, of course, I'm always open to hear your pain points. Slide, please. So these are some of the things that I hear probably the most on a weekly, if not daily basis. I can't map the location in NFIP, so I can't get a quote. Okay. My community isn't participating. Okay. They missed a payment. Now we have a 30-day wait. Okay. If I can't get the limits I need, where should I look? I love those questions, right? And what does my elevation actually have to do with my price? That's another common one. This one, I'm hearing a little less, which is good considering when the changes happened. But my lender doesn't like private flood. How can I get them to accept it? I work with agents all the time on that one. And then, why won't my cancellation request go through? Well, flood has specific reasons for cancellation, so they don't make it easy for you. They don't. So let's dig in on some of these. Slide, please. So I can't map the location, so I can't get a quote. That's not exactly true. So sometimes the NFIP mapping system can be down for periods of time. It is a government-run program with government resources, and we are in a weird time where I don't know where the resources are being allocated or not. There's also a lot of IT glitches and things that are just happening. So sometimes it's down, and it's true at that time you may not be able to go in and get a quote, but that doesn't mean you can't get a quote. It may mean you can't use NFIP for that one if it's not in your date range, but it just means that you got to wait for it to come up or do a private quote. On the private side, we don't have that issue for the most part. If a market went down, there's still like 20, 50 others to choose from. So okay on that end. And then sometimes rural locations are more difficult to map as they haven't been mapped before. That is totally true. So I'm here in Vermont. I wouldn't say I'm in the rural area of Vermont, but I can tell you there are parts of my town that have never been mapped. I think our first map in this town was 1988. It's never been updated. So all those people that just built up on the top of the mountain, they're not mapped. But that doesn't mean that you can't put a pin on it. So I know with NFIP, if it doesn't map through their system directly, that they'll follow up with you, right? It may take a few days. They'll come back. They might ask questions and say, hey, can you narrow it down so that they can put a pin? And it's the same on the private side. If I can give you like a map and I can say, this is your building. Would you agree this is your building? I can then geocode that location. So going forward, not only can I map it, but other markets can map it. NFIP might be able to pick it up more easily because there's already been a pin dropped. So it's okay that it's out there. We just got to narrow it down a little because we use that pin drop for a lot of other data. And then with that, sometimes if we can't put a pin on it, which let's face it, there are definitely parts of Maine and Vermont, New Hampshire, maybe even New York, that you just can't because I'm not sure. If there's trees there, I don't normally know where the house is. So the private markets on my end will say, can you give me a latitude or a longitude so that I can kind of drill it in? Similar with they'll just take a picture map if they can lay it into their own system and get that geocode in. And when I say geocode, I don't mean to sound techie because I'm not. But most private markets have their own proprietary mapping system that they use for everywhere. That's to get data about elevations, pinpoint those latitude and longitude lines, and kind of get a real understanding of the data available for that location. So, not true. You can still get a quote. It just may not be as fast as you want if you want to stick with NFIP. And if you want to go to private, we don't care that their system's down. We have our own mapping. It's okay. Another big one, my community isn't participating, so I can't get a quote. So, not true. Now, NFIP is for participating communities only and emergency ones, as they're the ones paying into that program and following the rules and guidance that's kind of set forth for flood protection and mitigation. That's true. However, most private markets do not require that you're in a participating community because we're not accessing that money or funding, so to speak. However, it is helpful to be participating in those communities because if there's a town flood walls or there's levees, like those kind of things, if you are in a participating community, can get rating credits. So private markets typically take that into consideration. If you do participate, hey, the town did these 10 things, we're going to take that into consideration in rating. When you aren't, it means you're just getting the free ball number. And I mean that in the most passionate way. So they're going to say, we estimate it's this, and that's the rate you're going to get. So it may not be as ideal as you want. But if your community isn't participating, that's kind of the only choice you get. So not true that you can't get one. You can, it just may not be the one you hope for. Next slide, please. All right, they missed a payment. Now we have a 30-day wait. Well, partially true. NFIP doesn't backdate. If you miss the new business payment, the policy needs to be written. They do have a new 30-day wait. This removes any credit rating or grandfathering. Basically, it's going to be rated on current rates. However, renewal policies have some grace period in there. Thank you, Don. They'll actually give you that expiration notice plus 29 days, which is nice, but it's on residential only, if I'm correct, right? Correct.
Yes.
So,
pause. Oops. We were about to give you some bad advice there. So all renewal policies, regardless of the type that you are writing, do now have that built-in grace period. It's the date of the expiration notice plus 29 additional days where the NFIP will honor the renewal policy.
Now, on the private side, though, we don't typically have a 30-day wait. That is not to say that there aren't waiting periods, because some do, but many do not. I do have markets that have no wait. Some have 7 days, some have 14, and some have 15. There may be a program in my arsenal that has 30. I just have never hit it, I guess, or never seen that come back through. So what that means is, okay, your NFIP policy, say you maxed out all these, they can't get it. If you don't want to wait 30 and you need to get it in place today, private would be an option to you as long as you picked a carrier or a carrier was provided to you that didn't have a waiting period. So you can still get it. You just lose all of that fancy grandfathering that's kind of going away anyways. So something to consider there. And then this one's really my favorite. So I can't get the limits I need. Where should I look? So NFIP and private both have a role to play in this marketplace that we're all in. They meet the needs in a variety of ways, and they're not similar. They're a part of a pool. So if you can't get the limits you need with NFIP, you would get a combination. So NFIP has a max limit, and if you need more than that, you'd go to the private market and say, I need an excess flood, and you can go over that. At the same time, if you can't get the limits you need with NFIP, it makes you eligible to go to the private market, pretty much any state that you're in, because a private market policy can give you all the limits you need in one policy. So if you have affidavits or diligent efforts, like that's where that plays in. So if the private market gave you a full value quote that you needed, that's why it would be okay to not go to NFIP. So keep that in mind. Slide, please. Elevations in pricing. So what does my elevation have to do with my price? So to be honest, most people, I actually taught a class about a week ago now, and most people don't know what the elevation of their building is. And that's okay. It's important information to have, but most people don't know. So they don't often realize that it actually has an effect on their flood price. So your building's elevations do have a direct correlation to the pricing of flood. Negative elevations mean that is where water could get the deepest, or pool. Positive elevations mean water is not likely to reach that point on your building to cause severe first floor damage. Now, every property is different, even your neighbors. So my house might be 3 inches higher, or yours might be 5 feet lower. Water might go right past my house to yours, but it would settle in your lower 5 feet long before it would get up to my 3 inches. So my neighbor has a bigger risk than I do. So my policy might be cheaper than theirs. But better elevations do not always mean lower premiums. Better elevations mean you're in a proper position to possibly avoid. But if, you're 5 feet up in the air, but at the bottom in the center of a valley, all the water's coming to you. 5 feet may not be enough. So it doesn't always, but typically it will correlate to some change or reduction in premium. So all risks are evaluated on their own metrics now. Some things will increase the price and some things will reduce it. That's similar in NFIP and private, because that 2.0 rating was to kind of better rate risks on their merits versus trying to group people in by a flood zone. And then with that, even though elevation certificates may not be needing for rating with NFIP, it can be a necessary tool when determining claim coverage. So whether it's a basement or not, your elevation certificate's going to kind of call that out. Elevation certificate's going to call out whether you have flood vents, which again, credit when you do things to mitigate. But over time, either way, as soon as that elevation certificate is issued, it's not really valid anymore. We can use it though, right? Until a new one is done, because that's the most recent data of a person on the ground at your location getting real details. Right. Next slide, please. And I'll go fast. I apologize. I only have 2 minutes. So lender compliance. Oh my gosh, I get noted probably in the first 5 years of the change. I used to get letters from each specific lender. They want you to fill out this thing to make sure that it meets the compliance. So here's a quick shortcut. Education is key. So if you have a lender pushing back, you need to remind them about the 2 corresponding regulations that basically say they must accept private flood insurance as long as you see these 2 compliance statements. So the first is saying that every lender should, except for federally backed lenders. So that was the first one. That one came out in 2009, 9 or 10, and started to be fully enforced in later 2015, I believe. And then this more recent one is now saying that you must accept private flood insurance, even if you are a federally backed mortgage. Because what they were learning is that the NFIP small limits didn't always cover their federally backed mortgages to the limits that they needed. So wouldn't you be surprised? They got caught with their pants down a few times, and they're like, okay, we'll take flood from wherever you can get it from. So just know these are what you're looking for. I took this out of one of my direct policies, but every policy we write does include this for flood because we want to be compliant with all regulations so that any lender can accept us. And then finally, again, in 21 and 22, they've really pushed now. So every lender should already be current, except those small ones. I think I see it mostly from those small individual, maybe 2 or 3 total locations in different rural areas throughout the US. But they need to be taught a little. So give them these. They will go look it up and be like, oh, now I see where this comes. And it happens all the time. Once we send these over, most often the lender's like, yep, we approve, and we go on about our business. And however, not all limits are equal. So a lender can decline private if the limits are not to their standard. It used to be that the private market could only, or the lender could only require you to get the max NFIP limit. But with these regulations, it means no. If your loan is $620,000, they can require you to get that limit now. So keep that in mind. So it's a good thing that they have to accept it from wherever it comes, but it also means now your lender can require you to get more coverage if they deem it appropriate to do so. Slide.
All right, and I will just make a mention here that we were going to have the cancellation one in here, but I missed a slide to delete that off because then we found out it's actually going to be included in a different topic that we're doing, so I was supposed to remove it. But if you guys have questions on the cancellation issues and glitches, we can definitely address those too.
And I apologize for keeping you overtime, but ta-da! I promised I will talk plenty about cancellation because that's a whole topic on its own.
Yes, I think that's why we moved it.
I needed more than 1 minute for it. I did. Um, any questions, concerns, issues? Because you guys make me smarter when you ask me things all the time, no matter what it is. And you can unmute, you can type in a box, open to everything. Sad face. Either that means I answered all of your questions, or you all love Flood so much now that you don't have any questions, right? You are very welcome, Mary Victoria. And maybe join us again. I don't know if it's the next one or it's the one after, but we've got 3 more to come. They're spread out throughout the summer because I only need 30 minutes of your time, but we can be talking flood. Please give me a call or send me an email if you have any questions in the in between or you didn't want to ask them here. Just know I'm always available all the time. Thank you guys so much for joining.
Thank you guys. Have a great day.